Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets, as always brought to you by FTX. Links available in the description below if you choose to sign up. There's also a free leverage trading guide which you should definitely read, send to your friends to avoid them getting liquidated. Also, thank you for your support on the recent videos. I'm glad you enjoyed this CBS interview especially. Leave a like on this one, subscribe, let's do all that good stuff to spread the good word, so to speak. So as far as BTC technicals go, before we dive into that, as far as sort of macro stuff or news catalysts, the main thing is on Thursday we've got more CPI data. And some unemployment data, but CPI is the main thing, coming in from the US, obviously. Maybe some volatility around that event. One trend that's sort of become apparent is, even with something like FOMC, which was kind of surprisingly hawkish and the market shook it off, is that while there's a lot of volatility around the event itself on lower timeframes, on the higher timeframes it doesn't seem to have as drastic an impact, and so price tends to sort of settle by the time all the news is done, the press conference is over. Price settles more or less where it started, just kind of dancing on the graves of the low time frame traders a lot of the time. So that's something to bear in mind. If you're kind of a short-term volatility fiend, that's for you. If you're looking at higher time frame stuff, a lot of it is still kind of orderly, which is nice, so you can choose the extent to which you'd like to pay attention to it, if any. But that's sort of the main thing as far as macro land goes. If we jump through our normal Bitcoin dollar timeframes, again, the monthly is not terribly interesting simply because it hasn't generated any clear breakdown or breakout signals. So a clear breakdown signal, again, would be a strong close below this 19.920k. A stronger breakout signal would be a close above 23k or thereabouts. We have neither at the moment, so it's not terribly interesting to me. The only potentially interesting monthly context is that we're trading above previous month's high at the moment, which comes in at 21k, which we know is a high time frame level from the weekly and the daily, and that's sort of more or less where the market's at, currently trading at 20,700. So that's really the only monthly context there. But the clearer signals, as I said, would come on a 20k breakdown or a 23k breakout, and we have neither at the moment. This time frame's just honestly been a bit washy, and the market's just been choppy, so that's not an entirely surprising outcome. As far as the weekly goes, this is one where I'm kind of split. So if you'll recall, last week we focused a lot on this kind of 21k level because it was the weekly and daily mid-range. If we look at the weekly close itself, price closed below the top of that resistance, and in doing so spiked previous week's high as well. So that wasn't a close through resistance, but I don't know. I'm sort of tired of this level. I can't really explain sort of purely in technical terms why I don't love it or why I don't put a lot of weight on it. But for me personally, it just contextually, it's not as interesting as some of the other stuff we're going to talk about. So purely technically speaking, yes, it's a close below resistance, so resistance is holding, but this on its own I didn't find terribly compelling, which is why a lot of my ideas this week are oriented around lower time frames, specifically the daily and even the intraday. So I guess overarching context, that's something to bear in mind, that weekly resistance, purely structurally speaking, is still intact, but sort of for where the market is right now, I don't find it terribly interesting. If the weekly were to move, I'd much rather it move towards this market structure high here at 22k or thereabouts, or maybe even the top of the range. I think those levels would be interesting. Certainly to start, this 22k level would be good because we could start to develop a shift or picture in terms of weekly market structure, but purely in terms of this level that we've been talking about at 21k, I think there's better ways to there are better ways to express it on the daily, and just on the weekly, I don't know, maybe my gut feeling is completely nonsense on this, but I don't really care all too much. And I'm not discarding the level completely, as you'll see on the daily and the 4 hour. There's a lot of sort of context and confluence around that same price handle, and it's where the market's been stuck. But I don't think it's as compelling for me, as far as weekly line in the sand goes, as it was previously. So take that or leave it. This area is still important, as we'll discuss momentarily. So where are we in the context of the daily? The daily is still in the short-term uptrend, right? Making higher highs and higher lows. And that's following the break in market structure that we had and discussed in the last episode. As you'll recall, the market structure level that we had on the daily was oriented around this high, and the market came in. You got a bit of trappy price action here with a close below retest and then a strong engulf. So on the daily time frame, that was quite choppy. But as you'll recall, in the intraday time frame, basically this was our it's fucked below here type of structure, and the support that we outlined below that structure that had to hold was this one, which is cool because that's exactly sort of where the market reversed, got that type of absorption there, even like a cheeky retest, although this is one of those FOMC ones, not going to read into it too much, and the market proceeded to rally from there. So that setup was good. That idea sort of played out, and now the market's more or less within that same consolidation. So going back to the daily time frame just for a moment, I think the old daily range that we had here is still potentially quite instructive. The highest close, as you'll recall, at 22.5, lowest close at 19 or thereabouts, and you get a mid-range which falls at 20.7k. And I think last week we even clustered out this consolidation here as type of extra confluence. And this is why I said that the weekly isn't all too important, because no matter how you slice it, sort of high 20s to 21k is still more or less the same area no matter what time frame you engage with. And that's unsurprising given that's just where a lot of trading has happened and it's the midpoint of the range. So for me personally, the one structure I'm paying attention to this week is within the context that we're in a higher time frame range midpoint. I'm actually looking at this 4-hour range here. So the highest close coming in at 20.8, the lowest close coming off that support we discussed at basically 20k, and that gives us a midpoint of 20.5k or thereabouts. So what are the potential bullish setups that might form as a result? Well, as you can see at the moment, the market's kind of overshot and traded back within the range. You had resistance. This was the excess. This is the CEOs fighting each other, and we're trading back within the range. So purely technically speaking, your next targets are range midpoint and range low. I'm not terribly interested in shorting this underside structure here. I think if I wanted to get long this market, and also just as a quick aside, you can see that this range midpoint isn't arbitrary. It also lines up with a bunch of recent highs here. You could just even just extend that and see that that level is technically significant. So for me, if I wanted to be constructive on this market, given the weekly picture is like technically at resistance, but I'm sort of feeling iffy about it, I think at the very least I'd need to see a move back through the range high and acceptance there, which would suggest that this kind of double deviation setup is fairly rare. So if the market's accepted back above sort of 21k, that might be good for another push at least towards the highs, or once again be forced to do business at the range lows. You can see there's a nice little triple bottom here, 1, 2, 3. Maybe finally we get a deeper spike of that, and any absorption there gives you a nice invalidation and also clear targets in the form of the range midpoint and the range high. So that's really BTC USD. Again, monthly isn't generating a signal at the moment, apart from spiking above previous month's high. The weekly time frame is technically at resistance, but I don't feel entirely comfortable generating ideas based entirely off of the structure. For me, it's the daily which makes the most sense alongside the intraday kind of version of that daily range, where the 20k-ish, mid-20 midpoint has to hold. And the way that that would work, you know, the fashion in which that would be compelling to me would either be back above 20.9, maybe I look for momentum continuation, or if there's a cleanup of these lows, there might be a day trade there if the market doesn't collapse towards 20.5, 20.8. So hopefully that makes sense. You know, it's sometimes you just get market conditions like these where I sort of go back and forth on context, what levels matter, and so on and so forth. So I will just kind of get more granular than usual and let that guide my expectations. And even if that means for the whole week I just get like one day trade in there, you know, from support to resistance, or from, you know, reclaim of resistance to the highs, or from the range low to the range midpoint, you know, whatever piece of that I can catch, as long as it broadly aligns with my system, I'm more than fine with that. And sometimes that's how the cookie crumbles. What would be evidence of abject weakness? I think falling below that range midpoint and the aforementioned breakout level that we had. So in this case, it would be anything that falls, that basically fails this entire pre-breakout consolidation and starts falling below sort of 20.3. And if 20k again turns bigger picture from support to resistance, not interested in any of that. So even just purely structurally speaking, this type of retest kind of has to hold in order to, even from a market structure point of view, if there's going to be a higher low, it has to come somewhere within this consolidation, which is why I'm kind of getting granular with it and open-minded towards looking for evidence of that. But it looks like I'll be trading some version of this consolidation this week if I get that type of setup. A bit boring, but sometimes the market's just like that. I get meh high time frame signals, so I have to get slightly granular with it and wait for very clear setups on lower time frames. Nothing too dissimilar on ETH. So the market pushed up into the top of its monthly range here at around 1700 or 1680s. For my taste, this push was a bit shallow. I wouldn't be surprised if it came in and printed like a deeper wick into it. No guarantee, obviously, but that's just something in the back of my mind. Similar to Bitcoin here, no clear breakout signal, no clear breakdown signal, just spiking previous month's high, and that's sort of the context there. On the weekly, this weekly close was nowhere near as sort of quote-unquote scary as it was for BTC. Depending on how you choose to almost cherry pick your market structure, as bad as that sounds, you could easily make a case that this is the low, this is the high, this was the higher low, sorry, this was the higher low, and now the market's gunning towards a higher high. And that's a completely reasonable take. Or if you favor recency, you could say that this is the high, this is the low, this is the lower high, this is the lower low, and so any rallies into this weekly area of market structure are technically lower highs. I think both of those arguments are like decently compelling, and this sort of speaks to the subjectivity of market structure depending on your look back period, and sometimes you just have to deal with that in trading. As far as ETH goes, one structure that we spoke about in terms of being important, and that's where the market ended up bottoming, was this mini cluster here on the daily time frame. Again, I box out the whole consolidation, but you could just use the highest close and the lowest close, and as you can tell, that was our kind of momentum continuation support. Market fell into it, and we got our next impulse, which is nice. Eye test wise, it still seems to be sort of churning around this sort of sandwich that we spoke about previously, but even then it's finding support at its lower boundary at the moment. So this is a bit choppy for me on the daily time frame. I probably have to do something not too dissimilar when it comes to ETH as for BTC, where the high time frame signals are like okay, but you can make a reasonable case for them being conflicting, so we kind of let the low time frame range guide us. And for me, that comes out to roughly, you know, if you use this as our range low at 1490s, this is our range high or resistance at 1600s or thereabouts. This is what we're left with. I think you can quite reasonably cluster off this cluster at 1450, 1460 or thereabouts as a range low. So more or less similar considerations apply. If we look at what price action's presenting at the moment, we had a push through that failed above 1600 and traded back towards the mid. I think a second push through, if it sets up appropriately, may be worth positioning for, given the double deviation is less likely. As far as the support picture goes, I personally don't like the diddle in the middle, although it's reasonable. Any dips on ETH, the area which for me, technically speaking, would be discounted, is the mid to high 1400s, and kind of same idea apply as from our Bitcoin section in terms of timeframes and size of the rotation. You know, anything at support that gives me some sort of retest of maybe the range midpoint or even the range high, I'm willing to take that. Diddling in the middle expressly as the market is right now, not terribly interesting to me. Hopefully that makes sense. As far as altcoins go, I mean, CHZ has got all sorts of World Cup narratives going for it. I'm interested in the monthly time frame. It's pushed back to its former range high here. So unless there are clear signs of momentum continuation through this area, I don't think fresh positioning is something that my system would allow for at the very least. And you can see that here, you know, it's above this previous high into the top of the range. So ideally you'd want to see expansion through that, and maybe you give that a bit of a chase. But again, I'm very humble about my breakout trading abilities. Even after speaking to CBS, it's just not something I do very well. I'm working on it, but in these conditions I don't feel comfortable like breakout trading necessarily, especially given it's not an inherent edge that I have. So maybe a pullback here would be reasonable if the narrative has legs, with this being some sort of World Cup thing. But you know, just kind of face value chart right now, it's at the top of the range, and there are probably some better setups to be had, either to do with outright just momentum through this area, blast and hope to catch a piece of it, or just more trading within the consolidation that the market is in currently. You know, a midpoint pullback, which has been technically quite clean, can be found at this sort of 20-cent handle. That's decent. Or again, depending on how CPI affects the market or whatever else, your intraday range low, pullback from range high but doesn't look like total garbage, is closer to 18 cents. You know, if you've got some sort of momentum continuation signals or those types of setups you're good at, this is a good area to watch, given there's monthly, weekly, daily, whatever confluence going on. But otherwise, if it's pullback season, I think these intraday levels are more than decent, certainly if the narrative is going to have any stickiness to it. As far as Solana goes, again, this is a victim of the exchange wars that we have going on at the moment. The basic premise the entire thing is quite convoluted. I did tweet about it. Basically, Alameda insolvency rumors came about. Caroline, the CEO of Alameda Research, came out to dispel some of them. Then CZ, the CEO of Binance, came out to say that they were selling their stake in FTT. Caroline came out to say that they would buy it at the price it was at the time, which is $22, in order to reduce market impact. And then they just kept it. Then Sam got involved, and it turned into this whole back and forth. And the basic claim that CZ is making is that as a byproduct of Sam's lobbying efforts for FTX, it was the expense of Binance and other competitors, and he didn't really like that. And Sam has joked in the past that can CZ even go to Washington DC, lol, and that clearly wasn't taken very well. So the whole PvP thing we talk about happening with exchanges and billionaires and their tokens and all of that. So yeah, obviously some headline trading to be done there, but structurally, I haven't checked recently. Maybe it's being sorted through some OTC deal. I saw some rumblings. But a lot of back and forth on that front, which I don't think is great for the industry. Especially if you're looking at it as a regulator and you're looking for signs of maturity among incumbents and big players, it all looks very silly and juvenile. And even if both of them feel wronged, it's probably in the industry's best interest that they stop squabbling and at least present some sort of united front that wants to grow the industry, grow the whole pie and not at the expense of your competitors, not doing so unilaterally or not acting against their interests or setting up this whole PvP type of thing. So Twitter's been fun at the very least, but a lot of these Alameda associated tokens haven't been having a good time. Solana is one of them. I don't find this terribly interesting anymore. When CBS came on the stream, we talked about this weekly failed breakdown, and I said, well, the classic cred trade would be to buy that level and then just sell it at the range high. And I said that kind of half jokingly because I think he was expecting, and the market looked like it was going to expand a lot more. But that's sort of what trapped it, ironically enough. So Sol, is just trapped between 30 and 35 at the moment, and there was an ugly kind of engulfing to go with it. So perhaps this weekly range becomes tradable on lower timeframes once again. That may be worth something paying attention to if you're on the day trading side of things. I would simply chop it like I have, 35 range high, 30 range low, and 32, 33 midpoint. That there may be something there from a day trading point of view. But, narratively and sort of catalyst-wise, it's hardly the strongest performer. The exchange coins themselves have also been moving, unsurprisingly, given it's their respective CEOs that have been at war. BNB is printed most recently a weekly breakout, which is nice, above the sort of 1319 handle on the weekly here. My eye is drawn a bit to this kind of congestion zone at mid 300s, 340, 350, that makes me not want to chase this. But I think any pullbacks into there, into the breakout point, would at least give you a clear invalidation, which is that if this support doesn't hold, the whole thing turns into a failed break, and then usual rules apply. But for the time being, it's a breakout and looks sort of technically speaking valid, and you can specifically see the area that's been breached on the daily time frame. Doesn't really matter how you want to slice it. Whatever version of this consolidation fits your fancy. That was a long time range, resistance, a bit of resistance break. So unless it's a deviation or whatever, or a failed break, and the reaction thus far is good, that should hold. And again, as I mentioned, mid to high 300s is your next level, at least this last low pre-break, but just kind of keep an eye out on this area more broadly. And then that's a range in itself, right? Sort of this consolidation that we're looking at. If you wanted to slice it up, you could do something like range low, range high, range midpoint, and those are your kind of respective targets for that move, as long as the breakout doesn't fail. So my chart would probably look something like this, right? So this is the support that has to hold, the market's bullish, and those are your respective targets from that move. Range low, range midpoint, range high. Again, assuming one at a time and the market keeps going. What would make the market look weak? Any daily close, especially through this kind of mini cluster that we've set up on the daily time frame, sort of this double candle structure here. I think anything below that starts to look a bit too deviation-y for my liking, but for the time being, the breakout is being supported. On the FTT front, this one's a bit more kind of fundamental driven. I mean, in general, it's been trending down against BNB, so, if you're going to trade the bullish side, trade the stuff that has been stronger. The reason the 22 handle has been so sensitive is because that's the price that the CEO of Alameda Research quoted as where they would be willing to buy the full FTT stake that CZ has or had, or I should say Binance has or had. So that's kind of why you're seeing a lot of ping pong around that type of price area, almost like a central bank-esque intervention in a specific level, which is kind of scary because I'm just not a huge fan of when people talk about floors or ceilings on price. People are analogizing this to the whole Sam coin mamba, sell me all you want at $3 and fuck off. Maybe that at the very least doesn't make for... That on its own isn't like a massive thesis. I'm sure TA on this is pretty arbitrary. It's sort of just been breaking a lot of structures and moving lower. But if you're going to trade this on lower time frames, I just keep an eye out on that 22 level. That seems to be where most participants are focused on. And if this feels constructive, or if this were to look constructive, I think I'd want to see it at least above where this most recent breakdown took place. This sort of 22, 23 handle, maybe there's something decent, but again, I think there are better options for playing strength, unless, again, it's short-term around that magic 22 level. I guess, as part of an obvious disclosure, Technical Roundup is sponsored by FTX, but I just kind of fudded the FTT BNB chart and said BNB looks better, so take that for what you will. We're not paid to present a certain opinion, or we're not foot soldiers in some exchange war. We have to come out and say how great everything is, and this side good, this side bad. We're traders who make trading-related content, and hopefully, after many years of doing this, our neutrality sort of speaks for itself. But, if you're cynical, that's fine. You can just skip the section when we talk about exchange coins and consider the other points. Matic's been super strong. It's onboarding all of Web2 into all sorts of... there's a Meta/Instagram integration. They were on Reddit. Their business development team just simply doesn't get paid enough money, it seems. This has kind of gotten away from a lot of the recent levels that I was looking for as far as this larger consolidation. In terms of where the market's going in right now, like basic eye test should instruct you that it is approaching an area of former support, potentially turn resistance around the 130 handle. So I wouldn't necessarily be blind long into this area. You could just chalk it up as a range, however, should the market continue. And it can be done in the following fashion, probably best on the daily time frame. Again, if we're taking this pre-breakdown structure, if that was our previous support, this is the previous resistance within that range, and the midpoint kind of speaks for itself. If you want to get long this thing, now yes, if it kind of turbo nukes into some sort of very scary looking pullback into this area of prior structure, that in itself is a big trade, although it would look very scary, but it's a fast move into structure. I generally like to trade those. But if this is one of those continuation ones, at the very least you'd want to see it overcome this 130 handle, and then that would give you the idea that this former range low has been reclaimed once again, and your targets become self-explanatory. Range midpoint at 170s, and then $2. None of those trades are available right now. It does seem to be like just a test of the underside for the time being. But if it does keep up, that's sort of what you look for. And obviously the inverse of that is true as well. It's a really fast move into a big level. So if you get any of your normal overthrow, failed breakout, whatever setups, that they are technically sellable given the market is resistance. But I think roadmap wise, this is sort of the area I'd pay attention to, given contextually where the market is right now. And just another point, this is like a weekly show. So it is very hard to sometimes keep abreast of new developments, and my views on the market change from day to day sometimes. So, if you want to tweet at me or something and ask for an opinion or an updated view or something, I'm probably going to be quite receptive to that in general, depending on how the market moves. It is a difficult balancing act, given it's a weekly show, but that's sort of what we're dealing with. And I think Link has been strong as well. CBS showed that one on our stream. That's a fairly straightforward local range high breakout into larger range high resistance. A lot of that move is, I wouldn't be chasing this right now. It sort of seems to have done its job, found support where it should have, and I'm probably a bit late to that, unless from here to here, if your invalidation's there, the risk reward of that trade isn't terribly attractive. Maybe you find some sort of intraday way to get on board. There's some sort of consolidation here that fails to break down, and then that can be your invalidation, and it may be worth chasing that towards the higher target. But again, I can't forecast or foresee that type of stuff before it happens. Hopefully you've got the price action tools to make those determinations independently. As far as equities go, I really wish the CEOs found a better time to fight, because equities still look good. At least as far as indices go, yes, there is CPI this week. So that is something to bear in mind. That's probably most applicable to this market. But as we've said before, the monthly time frame printed what looks like a reversal, because it closed below and then closed above and didn't turn that area from broken support into resistance. That's nice. You can see this early month pullback found the wick there. That's really cool. As a reminder, the area that I'm looking for as a sort of intermediate resistance or range midpoint is closer to the 4,000 handle, 3980s, 4,000, or just this monthly cluster here, which would actually be above this weekly swing high also. So that's kind of the first area to pay attention to if this momentum continues, which hopefully it does, because crypto could certainly use some strength from the legacy market. Same consideration applies if for any reason this setup fails, low reclaimed here. Just like in the bullish case, after you've had a deviation, like a second one is less likely, the same applies for support, right? So if this stab below was our deviation, if for any reason support breaks again, I'm inclined to believe that's a real breakdown, and then at the very least, the low's challenged in that case. But S&P looks good. Would like to keep it up. There's some seasonality that helps there with the US midterms coming up, and Republicans are seen as being responsible sort of anti-inflation stalwarts of the economy. So, if all of that starts to come together, then this thing might catch a bid or continued bid, given the technical levels sort of speak for themselves. So you want to still see 3,700 hold on a monthly, weekly, or even sort of intraday basis. Something to look out for. Nasdaq just looks worse because tech got battered. It's not thankfully yet following through on this high time frame breakdown, which is nice. Maybe it just gets dragged up as beta to the S&P and ends up reclaiming this 11k handle and at least taking out this double top, if not the range high. But it's really the Nasdaq the S&P that has my attention in that regard, and it held the retest that actually mattered. That was a lot. Hopefully it was informative as well. That's all from me. Leave a comment on whatever stuff you found interesting. And we do read all the comments and appreciate all your support, the likes, subscriptions, and so on and so forth. Again, FTX supports the show. Hopefully it's been made clear that doesn't impact our opinion when it comes to prices, markets, and lines on charts. If you want to support us, there are links available in the description below, or at the very least, go read the leverage trading guide before you start Ponzi punting your favorite instrument of choice. Hope you all had an excellent weekend. Plenty more content coming this week. That's all from me. Goodbye. Take care. Trade safe.